Incoming mail. Good morning and welcome to today's market color session. My name is Abia and I'm going to be taking the first half of today's analysis, which will be covering a very detailed analysis on currencies like the AUSD, NZUSD, and USD CAD. Shortly after, my colleague is going to come on board and do the second half, covering a detailed analysis on indices and touching a bit of fundamentals. Good morning to those of us that are currently online. I see everyone. It's good to have you here once again. Okay, so let's just look at the market and see what the market has in store for us today. For the sake of those of us that are just joining for the first time, I know you may be wondering what all of these on your chart are. So this is one of our trading strategies that we use here at the Value Flow Trading Academy called our All-Weather Strategy. And I'm going to be using this today to give you an insight into what it feels like to trade using indicators. All right, so like I stated earlier, I'm going to be starting with AUD/USD on the H4 time frame. And from what I see here, a new sunshine has been printed, which basically signifies to me using my strategy that people who have been buying AUD/USD from this point all the way above here are starting to take profit out of the market. So because they are now taking profit out of the market, I am expecting AU to begin to retrace into certain points that I'm going to be marking out on the 1 hour time frame. What are those levels I'm marking out? The first point of interest I'm going to be marking out is somewhere around here, and then the second point of interest is down below. So I now have 2 points of interest on this asset class, the first being 0.64117 and the second one being 0.63089. Now I know we do not all have these indicators on our chart. That's fine. All you have to do is to take note of the price point that I just called out so that when price gets into that zone, you can now add it with your analysis and you find confidence, you take the trades. And if you're a total newbie, that's fine. All you have to do is send us a DM for proper guidance, right? So yes, this is what I'm looking at. I'm expecting retracement into this zone or this level on the higher time frame. 1 hour being the time frame that we're currently looking at. So now that I have my 1 hour perspective, I'm going to quickly go down on the M5 to mark out different points of interest as well that I think price may retrace into before eventually going to the higher time frame POIs. So 2 things could occur. We could see confluences on this time frame that will confluence with the 1 hour points of interest or different points of interest totally. Now, for those of us that have been joining us, you know that there are 4 basic levels we mark out using the all-weather. The first one is yesterday's high, which happens to be all the way up here, and then yesterday's low. The third point of interest is day before yesterday's high, the fourth being day before yesterday's low. So you can see that day before yesterday's low and yesterday's low happen to be in the same level. So I'm just going to go ahead and leave that. Now, what I'm seeing from day before yesterday's low, we have about 2-3 confluences at that region. Price is currently going to trade into our trend when it gets here, and then the 2 different levels that we marked out. So why do we mark out points of interest? We're saying that right now we do not have a trade active, but we're drawing this level saying when price gets into those ones, we want to see what price does around this level. So for me, what I like to do is to set alert and go about my day. I could set alert if the price difference is far off, and then when price gets there, I get alerted, and then I come back on my chart to look for confirmation entries. So M5 time frame now is showing me that there are still more buyers for price to trade below. It is that price trade down here, find some resistance, some support around this level and continue to buy, or price is going to trade all the way here to this support level, which happens to be in confluence with our trend, our indicator trend, right? So yes, right now I'm waiting for price to see what it does. But if price manages to violate these 3 different points of interest I just marked out on the 5-minute time frame, then we know that it is headed for the H1 POIs, which I already mentioned, 0.64117 and 0.63089, right? So yes, a brief recap, what is my bias on AU? Overall, maintaining the most recent price action, I'm expecting AUD/USD to continue to buy, but I'm expecting temporal sells into those POIs. And if we see our confirmations, we're going to be looking for buys, provided our confirmation entries are met. For NZD/USD now, it's pretty similar to what we just saw on AU. On the H4 time frame, same thing, price has been buying for so long. People who were buying this market had to take out profit. We saw our sunshine printed. We saw a new retracement that was formed around here, but now there's a new sunshine, meaning that price profit taking has occurred as well. So because profit taking has occurred, I'm expecting retracement as well So where is price likely to retrace into? Where is price likely to retrace into? On the 1 hour time frame, it's very simple, very step by step and systematic. Just like I did on it on AU, I'm going to do on NZUSD too. So it's safe to say that price already traded into NZUSD. Our first POI, which could have been here, price already traded into that zone, and it looks like it's already taking off. I'm going to zoom in so you can see it clearly. So you can see that this is where we would have put our POI horizontal line. Price trade back into that zone, it is starting to move to the upside, right? So if that this trade continues, or we'll see another retracement that could trade all the way into the other points of interest that we have marked out. What are they? First POI 0.59445 and second POI 0.58121. Please take note of these levels. So yes, now that I have the H1 point of interest, I'm going to go on M5 and mark out same thing I did on A. Trading can be very, very systematic. You don't have to come on your chart every time trying to guess what to do. You should have a checklist that you respect. 1 + 1 = 2, right? So I've drawn out yesterday's high. I am drawing out yesterday's low, which happens to be in confluence with our trend and our H1 point of interest as well. Then I'm going to go ahead and draw out before yesterday's high right here, and then before yesterday's low, which is a bit downward. Okay, so is there a possibility that NZUSD is going to buy back into this resistance zone? So going to buy back into this resistance zone, find resistance, and then sell back into our point of interest. It is very likely. It's very likely that we'll see something like this. Tap into this zone, and then we see a sell into this point of interest. And then if support is met or support is found, confirmation entries are also met. We can now start to buy NZUSD from this particular level all the way upward. But if our confirmation entry is not met, what are we going to be doing? We'll now be checking for the second point of interest we marked out, 0.58121, and then we'll be buying from there. That is the advantage of having confirmations. There are strategies that allow you to set pending limits and trades just get activated. And then sometimes you try to see confirmation so that you know that, okay, price ready to my point of interest, I saw confirmation entries and then I took it, right? Those type of trades, even if you get stopped out, you're fine because you know it's just part of the game of forex trading, right? Instead of forcing yourself into the market in certain scenarios. So I'm looking at USD card now, which is the third asset class I'm going to be looking at before we go into our analysis on indices. And I'm starting from the H4 time frame as well. So price sold for a very long time. Sunshine was printed. What does that mean? Profit taking occurred for this particular sell trend downward. So now that sunshine has been printed, profit taking has occurred, I'm expecting USD card to buy. To buy into what zone? I'm expecting it to buy back into somewhere around this level, right? So I'm going to go on the H1 time frame and mark out specific price points that I expect USD card to buy into. So the first point of interest is always going to be the H1 trend, which is this red indicator you see. Everything you see here are different indicators that have been superimposed together to be able to tell its story. So I mark out this first indicator here, and then price is already inside the other indicator, so there's no point marking it. So it is either price continues to sell from here, or we're going to see USD card buyback here. Remember that as traders, as retail traders, we want to always sell high, buy low, sell high, buy low. Because USD card has sold for so long, it wouldn't be wise to start selling when price is already low. We want to sell high, so that's why we mark out these ones. And even if you decide to use a Fibonacci retracement tool at this point and mark out your most recent swing, you'll see that where price is, this indicator level around here is going to be somewhere around the 50 to 61.8% peak level, which is what we generally consider in taking trades from the top and riding them down, right? So yes, we're expecting price to come somewhere inside of this level, and then we'll continue to sell. I'm going to go ahead and mark out the M5 POIs again. These lines on the chart, for those of us who don't know how these lines come to be, simply click on Ctrl Y on your MT4 or MT5 platform to bring out these different period separators, so you can highlight different days on the chart. You can see that from this period separator to this period separator is a day. That is 5th of May and then 4th of May and stuff like that. So yes, let's go ahead and mark out those 4 points of interest we always do. Yesterday's high. Look how price already tapped into yesterday's high and starting to react. Now, I'm sure you may be wondering, why are we marking out yesterday's highs and yesterday's lows? These are basically support and resistance levels that the indicators help us to just easily identify, right? So there are support levels. We're saying that for certain points of interest, we could see resistance become support in future. Resistance non support becomes a buy opportunity, or we could see price trade into a support level, find support and buy, or price hits resistance and then starts to sell. It's very basic. So please do not get confused by indicators. It's same thing as price action, but now we now have this that has already been mathematically calculated to help us identify certain things on the chart. Our FXB students know this strategy and they use it on a daily. So yes, yesterday's high marked out, yesterday's low, which is the lowest low of a particular time period right here, is right here. And then we're going to go ahead and mark out day before yesterday's high and day before yesterday's low. So day before yesterday's high has been marked out as well. Final point I'm marking out is day before yesterday's. So day before yesterday's high and then day before yesterday's low. All right, so price already tapped into yesterday and then for yesterday's high, found resistance. It is selling already downward. So what did we say we want to see though? We're saying that we expect retracements to happen, remember. So even if price starts to sell and it continues selling into this point of interest on the M5, we want to now look for opportunities for USD CAD to buy back somewhere into the zone so we can sell high, right? So we can sell high and not just go in for comms. So M5 time frame is already selling downward, and when it gets here, we'll like to check if we see support held. If these levels hold or these levels hold, then we'll be looking for buy continuation. For peradventure they do not hold and they get violated, then it's safe to see that the USD card wants to continue its move to the downside, right? So yes, that is it. Pretty much for what I'm looking at. I'm just going to leave all of this that I just marked on my screen, my chart as well, waiting for price to get into those zones, and when they do eventually get into those levels, we'll be taking the trades. And if they do not, we're going to be seeing why they did not. Right. So we're going to be reconvening by 2 p.m. for a recap as we do on a daily. Do endeavor to be there, invite a friend to join us so that they get to see what we do here on a daily basis for free. Absolutely no fee to you, right? So yes, thank you so much for joining if you stay to this point. If you have any questions, this is the perfect time to ask before we move into the second session on indices. If you understand as well, you can just leave an emoji in the chat box so we can proceed into the second half. Hi, Mr. Solomon, Mr. David, and Mr. Koladi. Good to have you here. Okay. All right. Without taking too much more of our time, let us move into the second half of this session. Thank you so much for sticking around. Do not go anywhere. We'll be back very, very shortly. Cheers and God bless.
Good morning, everyone, and welcome back to the second part of this market follow session. How are we doing? Today we'll be looking at the US equity market, right? I mean the US 30, US 100, which is the NASDAQ, and also S&P 500. Looking at what this market is doing, and now we can take advantage of them. It's quite, it's been a while, but then we're back. All right. So interestingly, the market has been, been bullish according to our plan, right? According to our analysis that we've mentioned quite some time now. That was like 2 weeks ago. We stated clearly that we are anticipating a bullish market because of the current, performance so far. in this market. Current performance of the market. Let me share my screen. Okay. All right. So we've been very, very much bullish. And you can see the market also has been bullish for quite some time now, right? Since April 25, 24, we've seen that rally to the upside, and then market has been rallying 9 days, rally winning streak to the upside. Just broke yesterday with a decline. The market finished with lower than the actual open yesterday. So breaking the 9 days winning streak we have so far. So what am I expecting? So far, so good. I'm expecting this market to still rally to the upside, right? In terms of market structure, we're still expecting the rally to this upside. As you can see, structure has been temporarily bearish, right? Structure is actually bearish, but then we are seeing that temporary bullishness, which I want to believe it's going to continue. Why am I saying so? This was the last structure place, right? That swept all of this liquidity and gave us a new lower low. However, ever since then, price hasn't created a new lower low. Instead, what is it creating? Price is creating what? A lower high. That's also, this is lower high, right? And this is what? Higher low. That hasn't been broken yet for price to continue to the downside, right? So we've seen this that was created and then has not been broken yet. What happened again? We see another higher low that has not been broken yet. What are we expecting? Expecting that in a way might see like although price has done that already, this like a rejection into this zone again and then continuation, right? Like price coming somewhere like this and then we see that continuation to the upside. Why am I saying this? Number one, look at VIX index, right? VIX index, which is the fear gauge in the market, right? This measure the degree of either fear or greed in the market by institutional investors, right? You can see this spike. They were very, very fearful, and then we saw the market selling off. The same thing happened, right? February, March, we saw this rally to the upside, and what happened across board? US 30, NAS 100, and S&P 500. We saw that sell off in the market, right? And now, what are we seeing on the VIX side of things? VIX has actually sold off, selling off from 60.0 level down. It's currently now on 24.07, which is very significant, telling us that investors are back, REIT is back in the market, and we should expect investors' confidence again into the US market, right? That being said, what also is the factor giving us this confidence of buys in the market? It's because of what is it called again? Because of the Fed rate that is coming up today, FOMC will be coming up today. We're expecting, although President Donald Trump has been clamoring for a lower rate, right, which is good for corporate America, because with the lower rate, they can borrow more fund and then inject into their businesses at a lower rates to be paid back, right? So we're expecting more of a stable, number one, a stable rate, right? Or an interesting outcome would be the rates being lowered from say 4.5 to say 4.0 or 3.5. That would be so massive, right? If we have that happen by this evening, 7 p.m., then we should see a rally across board. So today for intraday trades and scalping, all of that, it won't necessarily be advisable because the market will be a bit sluggish. They are waiting for what will happen after that news. That news is really, really significant, and that's why the market is currently even stalling, right? So number one, we're waiting for the market to their results to come out, and then either see a fairly stable rate, the rate being unchanged. That's a good outcome. A more better outcome would be the rates being reduced from 4.5 to 4.0 or 4.2. That's a very good one because it will go a long way helping corporate America, which will drive these guys to the upside, right? We see that bullish movement, right? If the Fed rate comes out hawkish, right? The second one that I also mentioned is the VIX index. VIX is actually very, very significantly lower now. So it signifies that corporate investors are back into the game. They are running away from saving assets. And if VIX continues to go lower, then we should expect some sell-off. You remember we've been saying it since last week. For those that joined last week, been saying that we expect a sell-off on gold because of the bearish movement in VIX, and that's what we've seen so far. Gold started selling off a bit. Of course, we saw a bit of rally, but then it's actually sold off from those levels we marked out, right? So on S&P 500, these are the levels we're looking at. Until price breaks either of these two levels, we are significantly beginning to change structure to a bearish market structure, right? Like I mentioned, this area that has been marked out, something significant also is here. We saw this inefficiency. Like already, price does not like any inefficiency in the market. The market does not allow for any inefficiency. This zone here might either see a drop into this zone and then price begin to move to the upside, or from this normal support resistance price, although price has actually retested it, but we can still see another retest from this zone, and then we see that push to the upside. Today, there's nothing really significant that would advise us to do in terms of taking a position in the market. I would rather want us to wait till 7 o'clock, see the news release, make sense of it, what is coming out. Then we can now anticipate long-term movement by tomorrow, or by tomorrow significantly, right? Look for position and enter the market tomorrow. Because technically speaking, we are seeing the price is beginning to change structure to the upside, right? That being said, let's move to US 100. Also the same thing, because they are all related, right? Also the same thing. We have this level that has not been broken yet, this, and then also this, right, which are quite significant. And then you have this support on resistance around this zone, also with an inefficiency just below it, which we expect the market to come and fill, right? Because we know price does not allow for any inefficiency in the market. So we expect these two levels. It's also the same thing on US 30. So these are the key areas we'll be watching out for today. And why are we not taking trade again, like I mentioned already? It's because of the FOMC news that we're waiting for. That rate is super important for whatever decision we're going to take on this chart, right? Either US 30, that's Dow Jones, or NASDAQ, S&P 500 is super important. And like I've mentioned, the rate is important because it's going to help the corporate America to decide whether or not to borrow funds. Imagine they lower the interest rates. That is very significant. Then they can borrow at a very lesser rate compared to what they have before. You get? And also, that's a good one. Overall, one of the things that's also making us look at a rally again is because of the 90-day pause on tariff, right? Which, although that the effect is gradually dying down, but then it's still significant for us to be bullish on this market, right? That being said, let me know if we have any question on the 4-hour time frame. Nothing really significant, except for all of these levels that we've marked out on the daily time frame. We want to see that the market, we see that release before we start looking at technicals, because technical is a timing tool. What drives this market currently as we speak is fundamental, right? So why we are meeting for fundamental, trying to time this market now would be just playing on random luck, trying to guess and enter the market randomly, right? But technically speaking, there are some things that are still here that look significant, like this breaker block on this 4-hour time frame. Price broke to the breaker block significantly, so we expect that we are going to see at least 1:2. Expect a 1:2 setup around here, right? This is the entry, and most likely you can use this as your SL, right? Price tapping into this zone and then 1:2, but then it's not really significant. The confidence to take this market, to enter this kind of trade, is really dampening. So for me, I will want to see the aftermath of the news release before I now start to take significant position in this market. But best believe when price comes to this place, this serving as liquidity, we are going to see that rejection. Now the rejection can give you 1:2 or 1:3. I can't determine how long the rejection is going to be, but then you are guaranteed at least 1:2 with this kind of trade setup, because it plays out over and over again. The breakup, another block being violated, price is going to come back into the other block and then reject up from the other block and then we're going to see those move to the upside. All right, that being said, thank you so much for joining. It's a good place to ask a question. Mr. Ako Kolade, another Kolade again, Mangot Solomon. Do we have any questions that we can wrap up this session? And then we'll meet again by 2 to see if there's anything significant that has happened, which I really don't think nothing will change. But then just so we check if anything significant has really happened in this market, we can look at it together. So it's a good place to ask a question. If there's no question, let me know in the chat box if this analysis was helpful. Mr. Ako Arua, Mr. Kolade, Mr. Mangot, and Mr. Solomon Adidoko. Do we have any question? Do we have any question? All right, beautiful. In the absence of no question, we're wrapping up this session and then we'll reconvene again by 2 p.m. for a market follow. That's the New York market follow. Once again, be reminded, TBC Abuja 2025 is here. It's here. We'll be in the city of Abuja. Information to be coming very shortly on our platform. Just stay tuned on Instagram, Facebook, WhatsApp, IG, everywhere. You're going to see the information. Ensure you register as quick as possible once you see it. For coming to the city of Abuja once again. If you're in our last edition last year, you already know how fantastic it was. So I'm sure you sign up and we'll be right with you. Until next time again, by 2 o'clock, right, we'll be reconvened again for our second part of the market follow. Ensure you use proper risk management. If you don't see any setup, ensure you don't trade, right? Thank you so much for joining. Meet again. Cheers and God bless.